As we start the week, we see that stocks are mixed. The S&P 500 is up a little bit, 0.07% for the day. Nasdaq 100 down 0.09%. 20-year bonds down 0.38%. And gold down 0.49%. And I know we got a lot of you excited last week when we were talking about how great as a total trading chart. This weekly chart is on gold. You can go back in time and see how accurate it has been again and again for run-ups and rollovers in gold. And of course, we cover gold, bonds, and two big stock indexes every day to help you track these things. We appreciate all of you being with us. Let's jump into these charts. We see on the S&P 500 that we go into another week where things start off with a green up candle in our Heiken Ashi candlesticks. We see the derivative oscillator gaining upward momentum. Price percent oscillator heading up, not as strongly yet, potentially, as the prior week, just the first day of this latest weekly candle. But it is a green open box candle, and that is a good sign for continued movement. Two-day chart, that's where we can see sort of a sideways slide at this point. And we see where things peaked out on Wednesday. And then we had Thursday and Friday with a red spinning top, really a red doji. And so far for the week, we have a green, looks like a green spinning top. Again, have to really zoom into that. What it's showing us is a sideways slide. This is just the first day of the latest two-day candle. Price percent oscillator moving up just barely. Derivative oscillator continuing to lose upward momentum. So we'll just watch and see. Perhaps this sideways slide is simply a reset where after up movement, as we saw back starting on the 23rd of January, we saw a sideways slide where really just sort of it looks like the market digested its gains, got ready, conserved its energy, and then popped up for the three candles, 6 more days. So perhaps that's what things are doing. We'll just have to wait and see what we see. Remember, we're guided by the charts. We go from the two-day chart to the 4-hour, and we can see we had 3 down candles starting in the morning on Thursday afternoon, Friday morning. And then we had a green doji, some up movement there Friday afternoon, up movement Monday morning, bit of a pullback Monday afternoon. So again, we are still negative on our price percent oscillator. Derivative oscillators lost just a little bit of energy, downward momentum that is, in the afternoon. So we'll continue to watch and see what we see. Price movement has moved below that two-day trend line. It is still, however, well above that weekly trend line. So we go from the Nasdaq to the Nasdaq 100 from the S&P 500. We see the Nasdaq 100 down, unlike the S&P, but just barely 0.09%. And of course, we can see that again, drawing a green up candle. Big wick on the prior week. This is just the first day of the latest 5-day candle is a green up candle. But again, it shows that sideways slide already in the weekly. Before we zoom into that 2-day, we can see the derivative oscillator gaining upward momentum, price percent oscillator heading up. So we still have up movement strong as far as the biggest of our 3 charts goes. We go to the 2-day chart. Again, you can see that sideways slide a little bit, that prior 2-day candle that ended Friday. Lots of indecision tending down so far. Green up candle is trying to form. Derivative oscillator losing upward momentum. Price percent oscillator not quite flat. Price movements nicely above the 2-day trend line. And of course the weekly. And we go from the 2-day to the 4-hour. And again, pop up in the morning, pull back in the afternoon. Overall down for the day 0.09%. Still negative on the price percent oscillator on that 4-hour chart. Derivative oscillator lost a little bit of downward momentum in the afternoon. So we'll continue to wait and see what we see as things shake out. And again, if we have that strong rotation back over going up before the 2-day chart crosses over going down, that 4-hour chart crosses over during the week, you might have another jumping in point on an up trade. So we go back to the weekly chart. We leave our stock indexes and go to 20-year bonds, which on the weekly chart are still in a confirmed up move. And again, nice, strong up movement as far as the Heikin Ashi candlesticks goes. Remember, that tracks average pace. It does not track things like the price itself, which was down for the day 0.38%. We love our Heikin Ashi candlesticks. If you haven't taken that training at the website, you need to do it. You can find it there under Heikin, H-E-I-K-E-N, Ashi. I'll also put it at the very end of the video today. You'll see it there with the 4 trainings that we have special for you. The derivative oscillator losing upward momentum has been for many weeks. Price percent oscillator still managing to move up. So we're in a confirmed up move on the weekly. The 2-day chart, not quite enough energy to cross over going up. Derivative oscillators flipped over, but that price percent oscillator hasn't. We can see on this first day of the latest 2-day candle attempt to move over. Now, of course, even if it crossed, we wouldn't call it, because you don't call a candle until it closes. And this latest 2-day candle does not close until the end of business on Tuesday. So if it's an up day on Tuesday, might be enough to push that over. Derivative oscillators already trying to rotate over going up. If indeed that occurs, of course, it puts us in the ability to look for an up trade, since the weekly's already moving, already in a confirmed up move. We look at the 4-hour chart. We can see where things really peaked back on Friday afternoon, down in the morning, a little further down in the afternoon. Derivative oscillator losing momentum, price percent oscillator heading down. So we'll watch and see what we see on Tuesday and the rest of the week, see if we get anything shaping up for the potential of a jumping in point on 20-year bonds. Lastly, we go to gold as we always do, down 0.48% for the day. We look at this weekly chart, and of course we've been a confirmed up move on gold since October of last year, early October. Up for 3 weeks, down for 3 weeks, and then things started taking off around the week ending the 7th of December, and it's been a pretty nice up move since then. Derivative oscillators lost some momentum here lately. Price percent oscillator has too, not quite flat. We're going to see what gold's going to do. Is it really just, again, digesting some gains, getting ready for further up movement, or is it peaking out? We'll just have to wait and see. So far, we have what appears to be a red spinning top, maybe a doji forming for the week. We'll see how things shape out. We go from the weekly chart, and again, still in a confirmed up move, to look at the 2-day chart, which again, we can't call a crossover going down, but that may be what happens at the close of the candle on Tuesday. Derivative oscillator crossed over, flipped over going down back on Friday the 8th, the 2-day candle ending then. And of course, the price percent oscillator is just now doing that. Red down candle, the wick on the bottom forming, pushed through the 2-day trend line rather significantly, still above the weekly trend line. So we'll watch and see what we see on Tuesday at the close of business. We go to the 4-hour chart, and again, it's been in a confirmed down move on that 4-hour chart since it crossed over going down back in the afternoon on Monday, the 4th of February. So we'll wait and see how gold shakes out this week. That's where we are, folks, as we end the day on Monday, go into Tuesday. Hope that you are making sure to take all the trainings we have available. We've been putting some new trainings out here lately, some trainings that we've sort of recycled that were really good stuff that just seems to have been missed lately. So we want you to pay attention to those things. We're putting them at the end of the videos and also linking to them in the show notes. If you're not a subscriber to chartingwealth.com, you need to be one so you get this great material. How do you do that? You go to chartingwealth.com and sign up for free. If you're not receiving our text service and live in the United States, when we have weekly vertical crossovers, which is the most significant pattern change that we have for getting into successful practice trades, you need to sign up for that. You can see how to do that in the show notes. Also, if you've purchased our book, the book 8th printing is available. Appreciate everyone who has purchased it. Please do so. You can see links in the show notes on how to purchase the book, Charting Your Way to Wealth. It explains all that we do here at the channel, all you need to know to get started And we thank you so much for being with us. We love to hear from you. Write us cw@chartingwealth.com. And if you're not a patron sponsor, you're missing out on all the great benefits from our short chart training, our Bitcoin training, our long quarterly chart training, all those great things. They're all available at chartingwealth.com. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.